What's up, guys? Welcome back to another Crypto Weekly Review live stream. We have a lot to talk about. We are going to look at some of the macros. We're going to take a look at Hex and why I think that it could be above 5 cents by Valentine's Day, why I bought Hex, and why I'm starting to get bullish. I have 6 reasons for that. So as you can see, guys, Bitcoin, S&P, everything is absolutely ripping right now, and I think it is because the Federal Reserve Chairman Jerome Powell has given us a stimmy, and I'll explain that all in a little bit here. I just want to make sure everything is rolling and everything is looking good. Did it? What's up, guys? What's up, Funding Gym dude? Shout out to you. Thank you for being here and being supportive. What's up, Pascal.ai, man? Shout out to you. Let me give you a howl. Steve Esterfield, and shout out to the Crypto Cowboys. They're keeping this channel alive. We would have to file bankruptcy on Crypto Weekly Review without you. Jay Diggity, yes, mid-May 2026 for WoofPack NFTs. GS, shout out to you, man. Gordon Dunn, man, what's up? Blackwing, yo, WoofPack, shout out to you guys, man. All right, so we're back. Taking a look at Bitcoin, dude, yes, it fell back into the Bermuda Triangle right here, but ripped right through. Right now, it is rejecting the R1 pivot. Now, I've been thinking a lot about this. You know, when we take a look at the RSI, this last move is also on bearish divergence. What the heck is going on? So I started to look into it. You know, this rally has mainly been a short squeeze, and when shorts are forced to cover, when short positions are liquidated, they are forced to market buy. And before this rally happened, right when the year started, 85% of positions were short. All right, only 15% of positions were long. This could be the mother of all short squeezes. It's already been one of the biggest ones in Bitcoin history, and I think that because it's mainly driven off of short liquidations, could be why we're seeing that RSI being so cool. Nonetheless, it is a little bit concerning, and I do think that we might have a pullback here. I guess we're gonna have to wait and find out. Now, one good thing is you can see the 21 EMA is crossing the 200. That's called a baby golden cross, and right here, this purple line, the 55, is going to be crossing around Valentine's Day, which is a very, very important day in the macro calendar. As you guys know, we love to follow the macros because it is a crystal ball into what is going to happen with crypto, and that has proved to be evident during yesterday's FOMC meeting. Jerome Powell came on and he was super dovish. Now, I had expected him to raise 25 basis points and then talk really tough against inflation, but he didn't. And I think I know why. I was thinking about this all night long. I was like, man, why did he flip the script? Why is he, dude, he said disinflation 13 times. That rallied the markets like absolute crazy. So I think that it's because the Federal Reserve is no longer worried about inflation as much as it is worried about recession. And that is evident right here on the chart that everybody is talking about. Everyone is looking at the 10-year and the 3-month bond inversion, okay? This is signaling and screaming recession right now. You can see right here, this is the GFC. We had a negative 0.61 inversion, and right now we have a negative 1.32. That is almost double. We have mass layoffs going on right now. The economy is slowing down. Credit markets are tight. So I think that the Federal Reserve raised 25 basis points, which is jack shit, really. I mean, it really is when the CPI is 6.5%, you know. So we have never really tightened and lowered or higher interest rates going into a recession. I think they don't have any teeth, and I think that's why they're manipulating the CPI numbers to be cooler than they were by only calculating 1 year. They're only waiting 1 year instead of putting weight on the last 2 years. That way the CPI can look cooler and they can have an excuse to pivot, because I'm guaranteeing you the Federal Reserve is looking at this right here, and this is ringing alarm bells over there. So I think that Jerome Powell went up there, was acting super dovish, saying that They don't expect to bring down rates this year. It depends on the data. And guess what? The data is going to be much cooler. And when is that? Well, that is going to be on the Valentine's Day. So that's February 14th is the next CPI print. And it's going to be the first one for January. And it's going to be a lot cooler than expected. Now, here's the thing. Jerome Powell doesn't have another FOMC meeting until the end of March. So we're going to have 2 CPI prints, phony, fake CPI prints by that time. And I believe, as of right now, I think that he is going to pause. I think he has no choice but to pause. This is screaming recession. And I know he doesn't want to break anything. He kept talking about how much he wants a soft landing. So there you go. Do not fight the do not fight the Fed. Do not fight the trend. So that's why I went ahead and bought some altcoins. I do have a lot of dry powder still. I'm not planning on going all in and going nuts because this whole thing can break down. So if we take a look at the S&P 500, right? Okay, look one real quick. So you can see the last time we had an inversion that's half as bad as it is right now, we had the GFC, the Great Financial Crisis. Here is 07 is when it happened, and then things broke down in 08. Here's the chart right here. Here's the S&P 500 on the weekly chart. You can see this nasty dump right here. Now, right around here is when we had the inversion right at the top. Okay, so right at the top. It's like a double top from the dot-com crisis, the dot-com bubble, and dumped twice as hard right here. Okay, so this could happen. This is what Jerome Powell is afraid of. So he's talking dovish, and then we're faking the CPI numbers, and then they're going to pause so that the markets can pump, because this market is not driven by the real economy. The real economy is not driving the financial economy. We are all, ever since we had this right here, ever since we've had 0% interest rates since the GFC, the economy is addicted to cheap debt, and it's an asset bubble economy. And if these asset bubbles pop, it's going to decrease demand, cause layoffs, and we could have another GFC like this. So I believe that Jerome Powell, the Federal Reserve, has already pivoted in sentiment, and I think that they're going to have to pause. They have no choice. Plus, the calendar is open. This was our big FUD event, remember? This is when we thought Jerome Powell's going to come out acting tough. Guess what? He can't even act tough anymore. This is why I've been calling this rally our current rally. I've been calling it the Jerome Powell stimmy rally, okay? Because they can't print money and inject it into the economy and have a stimulus again. What they can do, though, is reduce the rate hikes. What they can do is talk a little dovish, say disinflation a bunch of times, say things are looking better and up and up. This is going to cause speculators to FOMO into the market. This is going to increase asset prices, which increases money in the real economy. It's going to have people investing again. It's going to have people shopping again. And this is the Jerome Powell stimulus rally. That's the way I've been looking at it. Now, remember, so when we have Valentine's Day, we are going to get an extremely cooler CPI because it is manipulated. We're all okay with it. You know, we all know what's going on. And I think that is going to cause people to absolutely buy in a frenzy. That's why I started buying in. And I think that for now, until this happens, until we have an absolute crash or a financial crisis, I think we are going to pump. Now, if we do have this crash and if we do have this financial crisis or whatever, because, you know, the yield curve is massively inverted, okay? We are raising interest rates going into a recession. We have never done that before. You can see when the GFC happened, we cut that shit to zero. And when in about 2016 to 2019, they were trying to raise rates, and that crashed the economy. This is the 10-year. We did have a big pullback back then. Here it is right here. This is right here about 2019. We had this big crash. This crash is because they were raising rates. What I'm trying to say is they couldn't raise rates before Cozy 19 when the economy was fantastic and booming. They couldn't raise rates then. What makes you think they can raise rates going into an economic bust? They can't. I think this is probably going to be the last rate hike. I think the CPI number on the 24th or on, sorry, on February 14th on Valentine's Day, it's going to be a rally. And I've kind of positioned myself for that. And I'm hoping we get a little bit of a pullback so I can get in a little bit more. And one of the ones I got into was Hex, and I will get into that and explain why I'm bullish on Hex and why I'm not as afraid of the SEC as we initially thought. I do have some evidence and some things to show you why Hex might be one of the big performers in this Valentine's Day rally. Now, I'm not trying to get you to FOMO. I have a lot of dry powder. So I'm saying all this with the caveat of the technicals are bad, okay? Like the S&P 500 right here, you can see the PE ratio. It is 49%, over 45% above trend line. It is overvalued. If you take a look at also the S&P index to sales, so for every dollar of sales in the S&P, investors are willing to pay $2.38, okay? So this shit is hot. This right here is the dot-com bubble. We are right at it. Everything is overheated. It's probably overbought, but this is a speculative rally driven by the Fed to try to prop up this economy because they really can't print any stimulus. But if asset prices go up, people are going to spend a lot more. And I'm planning on riding this, but I am keeping in mind that this could happen right here. This could happen. The GFC 2.0 could happen because we have a nasty inversion. We have a lot of things telling us that this is on the horizon. So I expect a lot of good news coming out in the next few months. And I am hoping for that soft landing. I'm hoping that JP knows what the hell he's doing. I'm hoping that they can pivot. Now, if they don't, okay, let's say this does happen. I have already planned to win, okay? I have dry powder. Imagine, all right? Imagine if you bought this dip in the S&P 500. Of course, Bitcoin didn't exist back then, but imagine that you bought this S&P at $680, okay? Now it's all the way up. It peaked at $4,700, okay? Imagine catching this dip. So basically, my mindset is like this. I am buying in. I'm going to keep dollar cost averaging in. I'm going to keep buying dips and try to get in. And if something does break, I'm going to go freaking hard. I'm going to go hard with pretty much everything I have in dry powder in USDC. And we'll talk about what coins that I'm looking at. And I'm really looking at this as a win-win either way. You know, like say we do crash, great. I'm going balls deep, you know, because what's the Fed going to do? They're going to do this. They're going to drop rates again, just right here. Monday, April Fools 2019. We had the big crash and then what? 0% interest rates. We had the cozy 19 thing, you know, so all we're going to do is print more money, keep interest rates low. It's going to inflate asset bubbles wilder than you probably can imagine, you know, like the ARK Innovation Fund, Kathy Wood is like predicting 250K BTC to 1 million. And I know she's kind of goofy and lost a lot of money, but her fund, the ARK Investment Fund, is the top performing fund of the year right now, you know, because it's all speculative assets, you know. So I'm saying it sounds crazy, but if we go back to 0% interest rates because we have to, because this happens, you know, that's what's going to happen to asset prices. They're going to go crazy. So I definitely want to have more exposure. As you know, I already have a HODL position and I'm adding to that right now. I'm not saying that we can't correct heavily. I'm sure there's going to be corrections on the way. I'm hoping there's a correction going into Valentine's Day so I can pick up more coins. So yes, I have pivoted. I went from being super bearish to now wolfish. And by wolfish, I mean I'm cautiously bullish, you know. I don't want to blow my load in this way too early. And then we do have some big kind of correction followed by a pivot. But yeah, I don't think that the Fed's going to pivot in the next meeting in late March. I think that they're going to pause. I don't think they have a choice. And I think the fake CPI numbers are going to push this market up. And I want to definitely dominate on some of that. Of course, the caveat is this all can go to shit at any second, right? So that's what this economy, that's what this government, that's what this Federal Reserve, that's what they've done to us. They've pushed us out the risk curve. We're looking at these charts and going, dude, what do I do with my money? You know, I have no freaking idea. It's not safe anywhere. It's not safe in my bank account because of the inflation tax. It's not safe in the stock market because the freaking big hedge funds can dump it. You know, it's not safe anywhere. So we're forced to look at this. We're forced to try to come up with a strategy, and I think this is a good one. I've bought some Polygon, I've bought some Hex, I've bought some ETH, I've bought some Shiba, and I bought some Doge in preparation for this next big rally that I think is going to happen this year. I don't think we're going to go to all-time highs or anything like that. And I think that Jerome Powell is walking on a tightrope right now. I think that, you know, we could possibly see some sort of a soft landing. You know, if we get CPI numbers on the 14th saying that we're somewhere in the low fives, well, the Fed funds rate's like up to 4.75. So really, I mean, they don't need to raise it that much. And then we'll get another CPI print if we can get under 5. And we're going to have the CPI at about a little bit like 4.75. And then we have the Fed funds rate at 4.75. They're not going to raise rates. They're going to let all of those rate hikes catch up because they're lagging. They don't want to crash this whole thing, especially going into the 2024 election. So everything to me is telling me that we're going to pump. I don't think we're going to go straight up, you know, but I think that we're going to pump. And that's basically the gist of my analysis from Jerome Powell's meeting yesterday. That's why we take a look at the macros. That's why we watch this stuff. All right. Just taking a look at the S&P 500 right now, it is absolutely ripping. Look at this. We had a big gap up. It's rejecting the R2 pivot. It's ripping. So it's ripping harder than Bitcoin. It's like, it's really unprecedented. Look at Bitcoin. It is stuck and rejecting the R1 pivot as of right now. It is rejecting 24K right now. And that's not even the hard resistance. I think the hard resistance is 25K. So the work is cut out ahead of us. We're on bearish divergence. We might get a pullback. And when we do, I'm going to be buying that pullback. All right. Like the primary pivot, anyone, if we can get around 21K in Bitcoin, I'm going to be buying altcoins. You know, that's a pretty decent enough pullback as it is. And why? Because I like shitcoining, all right? I'm a shitcoiner. This is me right here.
Listen, knobhead. If I want to have a swim in my own bin on the hottest day that we've ever had, I
want the big pumpers, and I think we're going to see a lot of them in this rally. I think Hex is probably going to be one of them. So let me get caught up in the chat, and then we're going to go take a look at Hex and see what is going on there. There's not much going on here. In Bitcoin, we already know it's bearish divergence. We're rejecting the R1. We're out of the Bermuda Triangle, and we're waiting to see if it can keep up. If Bitcoin can keep up with the S&P 500, what a crazy time it is to be alive. So Patrick Richard, what's up, bro? Do you think PLSD can still shoot upwards or it's done? Actually, that's a good question because I actually think that PLSD and Hedron and ASICs and anything related in the Richard Heart universe is going to pump. And I think the reason why we had such a massive pullback is because of the nasty FUD, because people thought Pulse Chain isn't coming. Richard disappeared, you know, after his whole like meltdown that he had, you know, so people were thinking it's done. But now, you know, if you looked at the Hex, if you looked at Richard Hart's interview with that really weird guy, you know, he was talking about how Pulse Chain is probably 3 weeks away. That interview was done on January 21st. Okay. So I'm super bullish, especially since we had like the Aragon client from the ETH 2.0 syncing to V3. We have activity. We do have some screenshots. We're seeing things happening in the Richard Heart universe. Okay. So I think that Richard Heart tide will lift all boats once V3 starts coming out. Now, look, Polygon is one of the biggest freaking pumpers right now. That's one of the things I bought. Now, Polygon is just a layer 2 ETH scaling solution. It's just a way to get away from ETH 2.0 fees. Okay. Pulse Chain is a layer 1. It's its own layer 1 with an entire system state of Ethereum in it. This is better and more bullish than Polygon. It's also in its launch phase. That means there's the most opportunity there. People know this. Traders know this. Everybody's building on Polygon right now because that's all they have. If we could just get PLS to launch, even if we have a V3 so people can build, it's going to be extremely bullish. It's going to be extremely bullish for PLSD and all of that ecosystem. I'm not touching anything. I'm not selling any Hedron. I'm not doing anything like that. I'm mining my ASICs right now for PLSB, and it's just sitting there. Okay. You know, I'm not selling any of my Hex stakes that came out or anything like that. I'm actually super bullish on Hex. basically, basically, one of the reasons why I bought Hex, and we can pull it up right now. One of the main reasons, look at this thing rip. Let's go. I bought under 3 cents, okay? And I gave away Hex under 2 cents, all right? So, hey, it's a self-fulfilling prophecy. I actually probably gave away the bottom on Hex, you know, because things are looking good as of right now. But I'm trying to get into Hex before all the Zen guys start FOMOing back in. And I think that's really bullish for the Hex price. You know, these guys got mad, you know, they left, they took their ball, they went home, they went over to the Zen thing. That's just dumping to zero. All of these projects like duct taped onto Zen have been coming out. Nobody's using them. Not too many people are interested in the NFTs. We got the Zen 1 chain coming out, you know, and people are kind of excited about that. But I mean, it's a few months out. I think once Pulse Chain V3 is out, I think a lot of those Zen guys are going to jump ship and they're going to come back into Hex. And I wanted to get into Hex before those guys did so they can pump it up. You know, I could see Hex around 5 cents, I think, around the Valentine's Day rally. You know, I was thinking today, man, I'm so bullish on Hex that, like, I was thinking today that I wanted to change my Twitter name to cryptoweeklyreview.hex. That's what I want. You know what I mean? Like, that's how much I almost did that today, but I just told myself to chill out because I'm feeling the FOMO. You know what I mean? So I told myself to chill out and wait. The other thing about Hex is this SEC lawsuit with the library case. Now, this is a big win for crypto, and this is a big win for Hex specifically. You know, people like try to like use this article to say that XRP is going to do good. No, this has nothing to do with XRP. Library lost their case to the SEC. They settled because they had a direct token sale. So a direct token sale made it a security, right? But the SEC was trying to get greedy and get more. They wanted the right here, I'll show you, the secondary markets sales to be a security, and the judge threw it out. The United States Security and Exchange Commission admitted on record that the sale of library credits, LBC, tokens in the secondary market does not constitute a security. All right. The settlement came during an appeal hearing between Library and SEC. These guys are doing God's work right here, man. Like, this is a very, very underrated story. Even I looked past it at first until I really got down to the crux of it. You know, Hex did not have a token sale. It had a AA lobby. There was no direct token sale. It's being traded on secondary markets. That's how you can get it. So this is really, really bullish. You know, sure, the SEC can come in and freaking handcuff Richard, you know, worst case scenario. If you want to talk parade of imaginary horribles, this can happen. This could be a reality. But remember, we always think in probabilities. You know, there are no certainties. There's only probabilities. And after the judge ruled this way on secondary markets, that makes Hex look a lot better for its case. It's not a slam dunk. It's not an open and shut case. It's very technical. And if they really want to sue, they're going to have one hell of a court battle ahead of them for a coin that has $3.2 million in liquidity on, you know, so like, is it worth it for them? This right here makes me very, very bullish on Hex. The fact that all of these hexpats, you know, these guys that left and went to Zen, all of these guys, they're gonna FOMO back in when Pulse Chain is back online. Richard is streaming again. Things are back to normal. The SEC thing is kind of cooling off and blowing over. And we have a major, major market rally. We have the macros and the Federal Reserve with their tail tucked in between their legs. We got fake CPI numbers coming out to pump the market. Like, dude, this looks good. It almost looks too good, to be honest. So yeah, as far as your question, I know that was like a long rant, and I'm sorry about that. But I just wanted to say that, yeah, dude, I am bullish on PLSD. And we can actually take a look at that here in a, why don't we just take a look at it just really quick before we jump into the Hex chart, because Hex is moving, dude. And I've had a lot of stakes come out in the last 2 weeks, a lot. So, and I have not sold, so I'm waiting. I'll tell you when I'm going to take just a little bit of profits though. So, you know, here you got PLSD right here. It kind of broke out of this trend line. You know, we did have a little bit of ascending wedge here. It broke down and found some support right here at 2.91. It is not responsive. It is not looking good. Everything is rallying. Hex is rallying. Good news. and it is dumping. Okay, so I don't know, is it Gunther? Is that who's dumping this? Who's dumping this shit? Everything's looking good. Stop selling PLSD. Let's take a look at ASICs while we're at it. Yeah, ASICs, you know, it's kind of coiling up right here on the point of control. How crazy is that? I did not draw this line. This is the point of control. I'm expecting a bounce on ASICs here, okay? But I know I'm a little bit disjointed, and we're going to take a look at Hex. I just want to get through the chat a little bit more. Technical support issue. Everything sounds good. Hey, finally, dude. Sub WW3. Some alts are pumping like crazy today. No retest, just keeps going. Haven't seen anything like this for a long time. We haven't seen anything like this since 2019. In 2019, there were no pullbacks. There were no second chances. It was absolutely crazy. That's what it kind of feels like right now. But I'm still like, I don't know, man. I'm hoping that we kind of get like a little bit of a pullback, because we know in this channel what we've been talking about. The CPI numbers are fake. On the 14th, we're going to get our new CPI reading, and that is going to be way better than expected because they're only calculating 1 year. So if we get a pullback until then, we know that that news is going to come out on Valentine's Day, and people are going to pump it. People are going to buy, you know, the S&P 500 is going to run, and then Bitcoin is a leveraged position of that, and that's going to run. And then your favorite shitcoin XYZ is a leveraged position of Bitcoin. It's going to just lift everything up. So we know a giant rally is coming in the middle of February. You know, we know that's happening, unless whatever, a black swan event happens, which I can't predict. But like, we know that good news is coming for the markets that's going to pump it. So I think that most people know, and I think most people in the macro markets and like the S&P 500 guys and the NASDAQ 100 guys, they know that this is coming. So they're not going to let off the gas. So Bitcoin is probably not going to let off the gas, especially since all the bears are freaking wiped out. They're wiped out, dude. The bulls did this right here. This is the bulls right here. The bears are wiped out. 85% of people were wrecked on January 1st, or were short on January 1st. Those 85% are wiped out. You know, so the bear is kind of extinct. All right. Anyways, let me get through here. Pause can be 7:30. Bang. What's up, bro? What's up, Ibrahim? Pause can last much longer than people think, though cuts may come in 2023 or 2024. That's when the markets should dump hard again. Actually, you're kind of right, but the cuts are going to come after this happens. The cuts are going to come. Let's take a look at this SPY chart. The cuts are going to come after this. All right. So the cuts, the rate cuts are a lagging thing. So the rate cuts are used to free up liquidity, get people to borrow cheap debt and invest it into stuff. You know, more buildings, you know, like more factories, more hiring, things like that. That's why if I told you like, hey, I'll give you a loan for 0% for a $10 million, you'd be like, okay, I'm going to build an apartment complex. You know what I mean? So now we're hiring all these people. Now we're getting all of these raw materials. Now we're getting all these licenses. All this money goes into the real economy. See what I'm saying? So that's what those are used for. So if this does happen, which it could, that's why I'm saying I'm having dry powder to try to buy a crazy dip. Then they're going to start cutting rates to try to stimulate the economy again. Like I said, it's basically a stimmy check. You know, go ahead and borrow this money with like, it's free money. Go borrow it and use it to make money. You know what I mean? And that stimulates the growth. That stimulates the economy. It gets people's paychecks and things like that, so people can live and they can buy food and everything goes up. You know what I mean? So yeah, it's a bit of a lagging thing. If we're cutting rates, dude, like they're not going to be like, oh, hey, unless inflation's back to the target of 2% and the economy is really bad, they're not going to cut rates. They're just going to keep them there. So the pause itself is super bullish though. So I don't want to take away from that. Mike, what's up, bro? Shout out to you. Where do you see the top of Hex in this cycle? Will we break 50 cents or hit the 1618 Fibonacci? So the 1618 is the golden Fibonacci, the retracement level. I don't know that you can do a Fibonacci to $2. I don't think it goes that way. I think it's just for retracement. But yeah, I think that I think Hex could possibly take out its all-time highs, but it all depends on Pulse Chain and how much people are invested into it. Now, we've seen all these crazy normie projects, such as like soccer or like football NFTs and stuff going on Polygon because it can't be on ETH. You know, if we start getting some of these normie projects on Pulse Chain because it's cheap, you know, I could really see that happening, because like I said in the last stream, all roads lead to Rome when it comes to Pulse Chain, because everything is kind of surrounded. When it comes to Pulse Chain, everything kind of leads to Hex because it's kind of like the heart of the universe, no pun intended, you know. So yeah, I mean, if that happens, I could see us very much going above all-time highs. And I don't think it's that hard, especially in this market with 3.2 million in liquidity in USDC. You know, like, it's not going to be hard. Just these Zen guys coming back and jumping ship on Jack Levin and his VC coin that he's got coming up, and his like inflation coin. Dude, the only thing inflating more than the dollar is Zen, okay? So once these guys like be like, okay, man, I'm tired of all-time lows every day, when Hex is like banging, they're gonna come back. You know what I mean? They're gonna be on Pulse Chain projects and things like that, and that alone is gonna pump the price, you know, like crazy. Much less like the new guys or whales stopping to sell. You know, once the sentiment is changed on Hex, you know, I think that, yeah, taking out previous highs is definitely a good thing. The other thing I was thinking about Hex was like, I know this is a bit of a conspiracy theory, but I was thinking like, what if, you know, a lot of guys are 10,000x. People have like ridiculous amount of money, like hundreds of millions of Hex and things like that. Sometimes I wonder if like Richard didn't know that we're going into a bear market, and he was just like acting crazy and twerking and doing all this stuff and outrage marketing and flexing to get these people to sell, especially down by the lows. You know, now that we've kind of bottomed, you don't really see that from him anymore. Could it be this like part of the Great Reset plan? You know, I've been saying this for months. My Great Reset theory was like, we need these big wallets to capitulate and leave and go away, so that the new guys, so we can basically reload the gun, you know, to pump again. Because imagine, let's say Pulse Chain V3 comes out, everybody's bullish, we have all kinds of normie projects coming over, and then we, you know, like, and Hex pumps, but like we can't pump because we have all these guys that are 10,000x just keeping the price down. So as long as we're low, as long as we're crashing and he's doing his outrage thing and everybody capitulates and everyone's mad and those guys are gone, because those guys are going to be the ones that are going to sell into the pump anyway. You know, sometimes I wonder that. I know it's a conspiracy theory, it's very tinfoil hat, you know, but sometimes I definitely think like maybe it was all part of the plan. I don't know. At least I hope so, because I really didn't enjoy the outrage marketing. Yeah, Brian. Bro, Brian, I'm bullish as hell. I know. I need to calm down. I need a breath. What's up, man? What's up, Not Your Enemy? What's up, Last? What's up, Crypto Krill? The judge set a precedent. That is really important. It is a precedent is a legal thing that people can cite in their court case. So yeah, it's extremely important. Shout out to you, Last, bro. When's the next Joker interview? I don't know. Man, I'll have Joker on anytime, man. You know, if he wants to talk Zen, we can come on here and talk Zen. Gerardo, trying to catch up at 1.25 speed. Dude, I'm sorry for you, man, because I already ramble like crazy and go on rants, so I can't imagine. I can't imagine. Don't like get like don't go into epileptic shock. Okay. Anyway, so let's just take a look at the Hex price right here. You can see how far are we from the bottom. You can see right here from the bottom of this wick, we dipped below the S2 pivot, and then we popped up, and we're 94%. So you want to talk about the #1 performing asset? Like, how can I be bearish on this? Like, if Bitcoin is bullish, how can I be bearish on this? Because like it's doing twice as good off the bottoms, off its lows, than Bitcoin did. Bitcoin closed one of its best months in history, 43% last month. All right, you know, we got Hex here. Let's see, where's the beginning of 2023? Yeah, January 1st, 2023. Let's compare Bitcoin to Hex. January 1st, 2023, we were here, we dumped below, and then let's go to the top of this wick right here. You know, so we're up 94%. So everybody's talking about Bitcoin's best month. This thing's up 94%. There's low liquidity. There's Zenians that are gonna come back. You know, they're eventually gonna come back. You know, and V3 coming. I mean, I don't see anything bearish. The SEC thing's blowing over, you know. The judge just ruled that second market transactions are not securities. There was no token sale. What's the problem? You know, what's the problem? I really don't see the problem. Now, does that mean I'm FOMOing hard and going balls deep into this? No, you know, I'm doing it realistically because I know we are walking a tightrope in the macro markets and the whole thing can turn into 2008. As you guys have seen in George Gammon's last night's episode, people have been bringing it up to me. This is his chart right here. And that the yield curve is extremely inverted. And we have decided, or I have decided, that it is because that is why Jerome Powell was talking dovish yesterday. That's why we're going to pause raising rates, and that's why they're going to fake the CPI numbers by only calculating it for 1 year instead of 2 years like we previously did, to make things look better, because they have no teeth. They can't raise rates any higher, and we are living in an economy where the tail is wagging the dog. This is not like, nobody cares about PE ratios. It's the economy bubble itself that is driving the real economy. It is the stock bubble that's driving the real economy, and not vice versa. You know what I mean? All this stuff. You've seen that the sales to earnings ratio is 2.3 on the S&P 500. People are paying 2.3 times what the S&P 500 makes just to be part of it. You can see that it is a speculative bubble, and we're going to pause rates so that the economy can pump, so that that money can go into the real economy and stimulate it. Because if equities dump, then we're going to see a GFC. You know, we're going to see this right here. So that's not the GFC. We're going to see this right here. So they need asset bubbles to run. It's either that or stimulus. Something's got to happen here. We're addicted to leverage. We're addicted to debt in this economy. So I just don't. I just think that we could crash this bad, but we're probably going to try to pump our way out of this. You know, so that's what I think is happening, and it's what could be more evident than breaking down this trend right here. The S&P 500 ripping out of its bear market right there and finding support on the primary pivot above the point of control. Like, I don't know what else you want. This is a monthly chart, including Cozy 19. There's the point of control right there. We're above the point of control, above the primary pivot, above the 21 EMA on the monthly. We have the monthly uptrend. I mean, I can't be bearish. You know, I can only hope for a pullback so I can DCA into it. By the way, DCA into the like button, boys. So, yeah, I can't help but, like, after what I heard yesterday, after I saw Jerome Powell with his leg or tail tucked between his legs, yeah, I'm not that bearish, but I don't want to get too euphoric, you know, because this shit could correct. It needs to correct, you know. And here we go. We got Hex. Here's the previous high. So it's taken that out now. And so it's kind of broken this downtrend. You can see, like, Hex usually has like these big pumps and then just goes to shit. Big pump and then goes to shit. Well, this is kind of like a steady climb and then a nice jump off the 21. And this is what you want to see. This is what's believable. Look at this candle finding support on the 21 and then ripping. I mean, that's typically what it is. This 21 is a trampoline. If you're below it, sometimes you bounce off. If you're above it, you bounce up, you know, and that's kind of how that works with Hex. So yeah, Hexagon X outrage marketing was bad. Not sure he can recover unless he makes me a millionaire. Bro, like, he's made a lot of people a millionaire, and yeah, I really I didn't enjoy it myself. That's for sure. But I wouldn't mind, like, I wouldn't really care about the outrage marketing if we were just like in a bull market. You know, if I'm driving a Lambo and he's flexing his Rolex, I mean, we're good. You know, but if this shit is just going down and down and down, and hexagons are fighting, dude. Here's what I think about hexagons on Twitter. Right here. This is how you guys look when you fight. Hey man, look, listen, man. This is how you look when you fight the Zen guys. Like this. This is you guys. I don't want to be part of it. You know what I mean? This is what outrage marketing did to hexagons. Y'all are at each other's throat like this. Look at this kick. This was you guys. You know, like, it didn't work for any of us. You know, it was very divisive, and I'm hoping he did that to help people dump their bags, and we could have our great reset, you know, like get all these 10,000X guys out of here. And the guys that didn't dump through the outrage marketing are probably not the guys that are going to fucking dump on your head. They're probably going to be the golden goose guys that are only dumping the interest. All the bad people, all the people that were waiting to fucking dump the shit to nothing, you know, most of them got flushed out. So if you want to think about outrage marketing abstractly, then yeah, kind of, you know, kind of, I guess it was okay. If it got out the people who were going to dump on me, I guess it's not that bad. 30-30 bang, bullish. Typically don't crash dump until the yield inversion uninvert. Things can take a while to play out. Yeah, absolutely. They absolutely can take a while to play out. So the other thing that I've been really bullish on is Polygon. Like I was saying, you know, Pulse Chain isn't here right now, so I've been kind of looking at that, looking a lot at Polygon stuff. Let's take a look. Where am I at here? I have some here. Yeah. So in January, OpenSea handled about 1.5 million NFT sales on Ethereum sidechain Polygon, while Ethereum's own mainnet tallied a little over 1.1 million in sales via the same marketplace. So we have seen that Polygon is doing more NFT sales than Ethereum itself on its sidechain. It's very, very adopted right now. It's kind of been like the go-to for development lately, which is why I bought a bunch yesterday after I saw Jerome Powell, you know, like being super weak, the Jerome Powell stimulus, you know, like that pumped the markets, you know, after I saw that. And I know the good news is coming on the 14th. So I'm like, all right, I'm buying Polygon. Also, Polygon surpasses BNB chain in daily transactions as Matic pumps 20% over the weekend. So yeah, we're getting, it's even like outpacing BNB, which is like one of the golden childs, you know, through the DeFi summer. I was big into BNB projects, you know, a lot of those were rugs. So like I kind of quit doing it, but like I made a ton of money on Cake. I do like BNB quite a bit here. So I want to pick some up because they're always burning. So I am going to pick up some BNB. You know, I did pick up some Doge and things like that. Basically the top trending assets, you know, that's why I go to like CoinMarketCap and I like to look at it. You know, you see Shiba Inu up here, Lita DAO, Polygon, you know, anything in these like top 10s, Dogecoin, all of these are going to do well because this is what people are looking at. This is what people are searching on CoinMarketCap. And these are going to be the big blue chip movers. So I did get some Polygon. I see it being adopted. And of course, you know, a lot of these Polygon sales right here. Oops. Oh, that's it. Oops. A lot of these NFT sales that beat Ethereum is the Donald Dump NFTs. Now the Donald Dump NFTs, I'm finally in profit on these. I bought some of these, you know, just because I thought it was cool that an ex-president has a cryptocurrency, you know, so I definitely wanted to be part of that, especially with the 2024 elections coming. I just see these being a quick flip, you know. I'm not like ideological. I just think that it's cool. I mean, like, what's a bigger NFT than a fucking president making a crypto? Like, I don't know. In my book, as being a guy that's like not like a super knowledgeable about NFTs, I'm like, okay, well, I'm buying this. This is a no-brainer. So yeah, the floor price went up on these, and not only that, but also ETH is up, so 0.45. You know, ETH is ripping right now, so definitely up on those because even the cheapest ones are 0.45 over here. You can see these, and mine are super rare. So this finally ended up, you know, hey, if you make a trade and you're a losing trade, just wait a while, you know, wait for the sentiment to change, and then you'll probably be up, you know, because this shit's cyclical. So yeah, you know, Polygon, you got the dump NFTs on there. They're going up. I continue to think that they're going to rise going into the elections, and it's going to be a lot of hype, you know. Basically every time that, you know, he's making crazy comments or doing rallies, you know, he has a big following, you know. He might actually be on-ramping people into Polygon, like people that are like normie people that are just fans. So like this is definitely a good bullish thing for the space. I'm glad I got a few of these. I'm glad I got some rare ones, and I'm glad they're pumping. I'm cool with Polygon, but I'll tell you what, if Pulse Chain comes out, I'm not going to be as interested in Polygon. I'm not going to be selling my Polygon. I'm not going to be selling my Matic, I mean, but I'm definitely going to be focusing on Pulse Chain projects, you know. And I definitely want to be part of that eco space, especially when it's just coming out, you know. And I definitely, if it does dump to like what Hex did, I definitely would love to get into some, because I don't want to miss out on the 400Xs, you know, like FTM or any layer 1, you know, that does its 400Xs. A lot of that is because it dumps to 0 first, you know, just like Hex. A lot of that was just dumping to 0. So I definitely want to be as involved in that chain as I can, because Polygon ship sailed and it's going to do well. The ETH ship sailed, it's going to do well. But the freaking Pulse Chain ship is just departing, and that's what I'm interested in. I'm interested in the beginning. If you can't be smarter, be first. And I intend to be first, and I intend to be part of that. So it's a very exciting thing. And, you know, just with that in mind, like, that's why I'm not really getting rid of any of my Pulse Chain projects. You know, yeah, I burned all my PLSD, or I swapped it out for ASICs, you know, but I'm mining all of those, and I'm going to continue to do that. And I'm just going to wait, because when PLS comes out, those are the first movers. Like, it's crazy. We have a chain. This is like unprecedented. We have a chain coming out, and for the first time, it has blue chip, like, household name recognized tokens. Like, even before this thing exists, it's already got Pulse Doge. It's already got, you know, like, all of these projects that are built to interact with Hex, you know. So yeah, man, it's like very, very bullish on this here. What's up, Hexagon X? I need to change my name to Island Boys. Shout out to you, man. Crypto Krill, like I just commented, I think you are onto something, and RH is flushing out the 1000X crew at the bottom of the bear. It makes sense. That's the only way it makes sense. Otherwise, you got to be like, okay, you know, this dude needs like therapy, you know, like, I feel bad. Like, I want to DM and be like, bro, is everything okay? Like, what's going on, man? You're good, right? Like, you're smarter than this shit. You know, you're freaking tanking the brand, bro. You know, you're making us all look bad, man. You're embarrassing me in front of my friends. Like, people send me that shit in my Telegram chats. You know, people send it to me DM, like, hey, dude, this is your boy. I'm like, ah, shit. You know? So I'm trying to, like, frame it in my mind as like, yeah, this is part of the Great Reset. It's all part of the plan. You guys got washed out. You were going to dump on us anyway. You were going to keep us from all-time highs with your, like, what are we going to do? Be at $100 or be at Hex $1? And we got guys with wallets with 150 million Hex with the liquidity at $3. You know, like, we're not getting to $1 unless these guys are gone. You know, it's not happening, bro. So yeah, let's hope so. So Xiang public testnet is finalizing. Xiang public testnet is now live. This public testnet right here is the precursor to the ETH Shanghai update, and people can go on right now to this testnet right here. It's called Chapella and Capella, and they can practice withdrawing their ETH stakes. So, you guys know that Shanghai is coming, and people for first time in years are going to be able to withdraw that staked ETH. ETH is up quite a bit, you know, and I think that it's going to dump ETH a little bit. I'm not sure it's going to be like a catastrophic thing, but this is a buying opportunity. This is not a FUD event. I'm not trying to FUD you out, but as of when this article was written, there's been a total of 27,595 transactions in the average of 4,618 blocks. Okay, so a lot of people are going around saying like, yeah, dude, so what? People will be able to withdraw their ETH, but, you know, they're not going to dump. You know, like, I see 27,595 attempts to dump. Practice. They're practicing to dump, okay? Now, I'm not saying that we're, you know, like, things are looking bullish right now, and that's really saving this. Like, imagine if the FOMC came out, imagine Jerome Powell came out and just started talking trash and started hammering against inflation. You know, he's more afraid of recession than inflation right now. It's clear in how he's talking. So it's like, imagine if he was the other way and things got bearish and dumped. You know, like, people would, these 27,000 transactions, these guys, they're going to be going to dump it all, you know. But now that we're kind of looking bullish, and, you know, we have the Valentine's Day, you know, fake CPI numbers that's going to pump the S&P, which is going to pump Bitcoin, which is going to pump ETH. I don't think people are going to sell that much. I think there's going to be some profit taking. I think a lot of these people have been locked in a long time, and there's going to be some profit taking. Now, on the other hand, a lot of these people lock their ETH at 4,000, you know, so maybe they won't. Then maybe they're going to wait. But I do expect, you know, traders front running this Shanghai update and then, like, you know, trying to sell a little bit before it gets unlocked, fearing a dump, which is going to cause the people who are unlocking to fucking panic a little bit and thinking that they need a FOMO exit. And it's going to cause a little bit of a dump. And that's where, you know, I'm going to be buying some. I'm hoping so, because I want to buy some more ETH. Like I've been telling you guys, I don't really care about buying any more BTC. I have a huge BTC stack that I rode off the cliff with throughout this whole bear market. So I want shitcoins, you know, I want to be in the trash.
This is not bad.
I want to be this dude right here.
A swim in my own bin.
You know what I mean? I like swimming in the trash bin. That's what I want. I want alts. So I want ETH real bad. So if we get some 27,000 transactions of people dumping, I'll take it. I'll take $1,000 ETH. That's where I'd be looking at it at. By the way, guys, I'll tell you this. I'll tell you one thing. Just so I'm not too euphoric, I'm gonna change my name at 10 cents. Right here. Where's Hex? Hex daily chart. There's my original descending triangle. Now remember, there's one right here, but I deleted it because it's too busy. Right here. Right here. This is at 10.5 cents right here. And you can see there isn't. Here's the point of control. I think we're gonna have a lot of resistance at 5 cents. So 5 cents is gonna be the next big one, I think. But yeah, the big one, the macro mega trend right here is this descending triangle at 10 cents. If Hex goes above 10 cents, I'm going to change my name to cryptoweeklyreview.hex, because dude, that's Crypto Weekly Review Ferrari time, and at 20 cents is Crypto Weekly Review sell his company and just do YouTube and crypto time, you know. So it's a big deal for me, you know. So we'll see. I might change my, I'm not trying to be, damn, I am kind of euphoric, huh? All right, enough of that. Taking a look at ETH really quick, you can see we have that golden cross on ETH too. It's not moving like Bitcoin. Bitcoin's really stealing the show here. Kind of surprised. Well, let's see if it has any divergences. Oh my god, the bearish divergence on ETH is even worse. Okay, so it starts here. So this, look at the RSI, like really ripped right here, but we have to discount that. So we actually got to go like this, you know, so you can see that, you know, obviously we're making higher highs, not by much, and we're making higher highs, and then the relative strength is going down. This looks bad going into Shanghai, guys. This looks bad. So where could we possibly dump? Let's take a look. You know, are we going to take out these lows, the lows of 800? Nah, I really don't think so. I don't think we're even going to take out these lows. Here's the point of control. 1200 and 1270 right here in this area, I think is a good buy, and 1100 is a good buy. You know, ETH 1K, you know, like we might dip below 1K, but you know, that's a buy. You know, get 10, you know, I'll probably get 10 at a K at 1000. I'll probably get 10 ETH right there and hope, you know, hope that it kind of corrects down there. Like, yeah, I mean, the bear market can resume. This could be a fake out, you know. ETH, am I looking at ETH? What the hell's going on? It didn't even set a higher high yet. That's crazy, bro. ETH is weak, man, going into Shanghai. This is a little scarier than I thought. Damn, yeah, Bitcoin's really stealing the show. Let's take a look at the BTC.D. Hold on. This is the Bitcoin dominance chart. Okay, yeah, so it's downright euphoric. You know, like if we zoom out though, let's go on the monthly. Here's the Bitcoin dominance chart right here. Had a nice, really nice move. Is correcting a little bit right here, and below the 21 on the monthly. It does seem like it's not really gaining any momentum. It's still in my channel that I drew a long ass time ago. When did I draw this shit? Since January 21, it's in this channel. It's only halfway up this channel. Imagine if it breaks out of this, what it's going to do to ETH. Though I think the time that it might break out of this and is when during Shanghai. I really still think that just by looking at the ETH chart, dude, like we haven't even set a, hold up, that's a monthly. We haven't even set a higher high. What the frick? I never look at ETH. I always buy looking at Bitcoin. Dude. Yeah, man. It's right kind of like at a double top if you count this wick. I mean, it tried to pump, but yeah, I mean, we do have a little golden cross here. It doesn't look that bad. Let's see, the 14th is over here. If we ride that up, when's that purple line gonna cross here? About 15-20. If we can get, what am I looking at the right chart here? Okay, yeah, okay. So, you know, maybe we'll have the actual golden cross there, like around the same time. So we'll see. We'll see what happens there. What's up, guys? What's up, chat? TD coming soon. L1s might be worth a look into. Which one is it? These are L1s that what's QAI and SUI? What is that? WW3. What's up with ETH APY if you stake it natively? What's the ETH APY if you stake it natively? Dude, I don't even know because I'm not staking it. Let's take a look. That's a good question. What's up? Be mindful of love. Shout out to you. You're coming in late. Once again. Guys, DCA into the like button if you're here. I think it's like institutions are earning 8.5 APY. No, that's wrong. I thought it was like 4%. If I'm the last, yeah, right here. Yeah, I'm right. It's about, you know, 4.05% APY, which like originally, you know, ETH had 4% inflation. But now ETH is deflationary, so it's a safe way to get 4%. I guess it's a safe-ish way. You know, I mean, even the S&P gives 2% dividends, but I mean, look at the S&P; it's just as volatile as ETH lately. You know, we're living in a hyper bubble. So, I mean, if around 5% annual percent yield, it says. But you know, I think realistically, you know, if you're in a pool and stuff like that, you're probably getting like, you know, 4%. So, you know, if you got 100 ETH, you know, that's probably pretty good. Because you're getting paid in ETH, you know, that's probably pretty good to a good bet. You know, I don't think Lido is going to go bankrupt. I don't think they're going to do a FTX on you or anything like that. But you got to remember, you are giving away your keys. So, what's up, Bree? What's going on? Testnet L1s right now. Oh, okay, gotcha. I think it's around 5% or so. Yep. Benny Blanco, what's up with you, bro? Where is this safe to stake yield? To stake yield? What do you mean by that? Can't Lido rug? Yeah, I mean, I because Lido, you know, is like San Francisco based, I believe. It's like Silicon Valley, like Coinbase, Lido. These guys are in the United States. Where is Lido? And under US Lido ETH. Not Lido Island. Where are they based out of? I'm pretty sure that it's in the United States because the problem was that most of the Ethereum nodes, most of the staking is the validating is done in the United States, and Lido Finance is one of them. So they're in the US, regulated by the US. They have strict standards and reporting and licenses and stuff like that. So I think that, you know, they probably won't be that bad because the ETH is getting the yield is getting paid in ETH. You know, it's not like Lido is paying you. You know what I mean? It's coming from the network for validating. So I really don't see, unless there's like giant corporate fraud, which heads are gonna roll. I think it's more safe. You know, like, but then you have Celsius. So yeah, I don't know. Yeah, it's kind of it. I think staking ETH on Lido, you will be okay. I think you're more worried about getting wrecked just when the price going down or something like that while you're staked, and with the small yield. But if you're just gonna sit with 100 ETH in your wallet, I mean, and you don't want to do anything with it, I mean, you might as well just put in Lido and just wait for the next euphoric time, and it's just gaining 4% a year. I mean, it's not that something to do with it, you know. I wouldn't like FOMO into it, especially if you're doing it with just a few ETH. Like, who gives a shit? You know, put that few ETH put it into Hex, you know, put it into some new monkey project or some shit like that. That's what I'd do. I think it's safe. Yeah. When do you expect when expect PLS launch? So yeah, the PLS launch. Now I was watching Richard Hart with his interview with the weird guy. And that was on January 21st. Everybody was talking about Bits Lotto and stuff like that, and 21,000 Bitcoin price. So he was saying back then it was 3 weeks. And typically, you know, I don't care.
4 more weeks. You guys remember 4 more weeks?
You know, typically I don't care, but because we're seeing Aragon, the client, sync to the nodes of V3, you know, because like we're having a little bit of updates and a little friendly pissing competition between Jack Levin and him, you know, like we're seeing some updates. Like we did see that what was that chart that everybody is showing on Twitter? Let's see. Pulse chain. It just like started operating on the 27th. Let's see if I can find a screenshot of this really quick. You know, we're getting news and stuff like that. We got HVID and KDP pumping it. But yeah, this one right here. This is what I'm looking at right here. You know, we got 10-second blocks. We see some activity right here, some processing blocks right here on the 27th. I mean, like you know that we kind of know that V3 is like coming. Like it's like we can see pictures of it and you can see that it's operating. We know that all the E2.0 clients are syncing to it. It's going to take some time. It takes blocks, you know, so we know that that shit's coming. And also the only prediction that we have got is on that stupid guy's stream. That's the only prediction we've got since mid-May. I think it's unprecedented, you know, like I think now I watched the whole HexCon 2023, or was it? Yeah. Whatever, last time that he had a live, and he didn't even talk about it then. All he talked about is like, hey, I'm just like having sex with beautiful women and all that. So we didn't even get that much from him like that we got on January 21. He said, you know, 3 weeks or something like that. You know, it's been pretty much almost 3 weeks and we're seeing some evidence of finally, you know, like we were saying, me and Funding Jim were saying in my last stream, we were like, dude, buy Hex when you start seeing devs talking about it, when you start seeing screenshots and stuff like that, because when V3 comes, it's going to create a FOMO cloud, and a lot of these guys that are like jump ship for Zen are going to come crawling back, and they're going to be buying your bags. They're going to be buying it up. So that's exactly what I did, you know, like I saw that the Jerome Powell was super dovish during the FOMC meeting. They raised only 25 basis points. I got a bunch of pulse chain news coming up. We've had massive dumping, down 97%. Yeah, I'm going to buy, you know, I'm going to buy because I know that, you know, these Zen guys are going to come back. I know that sentiment is going to change. And, you know, when PLS comes back, I mean, I think Hex is back. I think Hex is completely crazily oversold. I think, you know, we're having the freaking FUD of the SEC and no pulse chain and a Richard's freaking midlife crisis all in one. I mean, that you'll never get like more FUD. That's as much FUD as you can. And remember this right here. The SEC settled with Library saying that secondary sales are not a security. Well, Hex really was a secondary sale. I mean, there was really no direct crowd sale. Now, don't get this misconstrued. In the Library case, they got in trouble for their direct sale. They did. But the secondary sale, the judge said that it's not a security. So we're looking pretty good, or at least the probabilities are better in the SEC thing. You know, Richard Hart is mostly like normal. And then we got the Zen guys who dumped, you know, not half, but a chunk of the community left. Like, dude, that's about as bad as you could buy a market, you know, when you buy when there's blood on the streets, you know, like you want to talk blood on the streets, Hex is like chopped in pieces. So yeah, I bought, and I'll probably buy some more. And I think Pulse Chain comes out, I think 10 cents is in the money, is in the cards. But now remember, we got the S&P pumping, you know, we got Bitcoin pumping, we got the Federal Reserve about to pause. We don't have any FUD for FOMC meetings until mid-March. We have fake CPI numbers that are going to look good. Things are looking too good, you know, so we might correct, but I think overall midterm, I think we're going to go up. The only thing that can stop us, of course, is this, you know, right here. The only thing that can stop us is the 10-year and 3-year bond yield inversion, signaling a weak economy. We got mass layoffs, you know, we got a lot of flashing red lights in the real economy. We could have a break in the economy and a big flush down GFC style. Now, if that fucking happens, I have the dry powder to buy it, because as you can see, all of these huge black swan events, they typically have a V-shaped recovery. Even the .com bust, I mean, like, it gave you like it gave you 6 months to buy. It gave you 6 months to buy right here in the dot-com bubble, and then boom, back to ath. And then we had the big GFC, the Great Financial Crisis, and it gave you what, 1, 2, 3, 4, 5, 6 months to buy, you know, and then bam, the biggest rally of all time that Peter Schiff missed because he only looked at shit like this, you know. Remember, the real economy does not drive the financial economy. The financial economy is doing its own thing. We're living in an asset bubble, and I've accepted it, and I'm okay with it, and I'm planning to capitalize on it and make money off that. So yeah, this shit looks bad, and this could happen. And because this shit looks bad, that's why the Fed is coming off so. That's why the Fed is coming off so dovish in the last meeting, because they're afraid. And I think that they wanted to cause a market rally. Since we live in a speculative bubble, we need extra money in the real economy, and instead of printing it, I think that a nice pump in the markets can do wonders for this economy. That's pretty much the gist of what I got today. So I'm going 5 minutes over. I just wanted to keep it to an hour, just kind of experimenting. Guys, you notice I haven't been making my short-term form videos. They don't do very well. So I'm trying to like incorporate memes back into my lives. If you know anybody that would want to stream with me, I'm down to do it. But otherwise, you know, I'm gonna keep at it, keep looking at these charts, keep buying. So let's hope for a dip. And I think the dips for now are to buy. And now, don't forget, look, we could get faked out here. This could dump and then go to new lows and shit like that. But you can't live your life. You can't live your life waiting for calamity. You know what I mean? Like, you have to live your life to be ready for calamity. Like, if this does happen, I'll have the dry powder to capitalize on it. But I'm not going to live my life when we've broken out. Look at the S&P's broken out of its downtrend. Look at this. This is significant. It broke out of this. We have confirmation up here, right? We've broken out of this. I think the major confirmation would be above like 4,300, but then it's too fucking late, you know, like. So I'm not going to live my life waiting for these markets to collapse, you know. If it goes down and like I was faked out by one of the greatest fake outs in all time, so be it. But I'm gonna keep DCAing into this, and yeah, that's kind of where I'm going with it. And I think some of the big winners right now is going to be Polygon, Matic, Hex. I think I've kind of stopped buying Zen. You know, it's not buying, but I stopped minting Zen. It's kind of boring, and I think people are losing interest, to be honest. I'll buy an NFT so I can do X1, but that's about it. Then I'm doing Doge, of course, you know, the big blue chips, you know, you want to do that. The big hype coins, you know, Elon just applied for licenses to be able to transmit money on Twitter. You know, of course, one of them is going to be Doge. It's not going to be just Doge. He filed for money licenses like fiat, and then as a subgroup, he had crypto. And if you want to talk crypto, you know it's going to be Doge and Bitcoin. You know, like, dude's going to freaking pump it. He's going to get the licenses. You know, he's building Twitter. He wants to make a long form video content. He wants to do, you know, payments processing. He wants to make his dream app, you know, to compete with WhatsApp in China. So, you know, so I'm definitely bullish. You know, the world's richest guy. Yeah, I'm going to do the coin that he's shilling. Yeah, I'm going to. So I got that. Got Sheeb. Got Polygon, got ETH, got Hex. That's all I'm interested in right now. I'm definitely, and oh yeah, FTM, man, my bad, damn. Yeah, so I have so much FTM though. Like, I never sold my FTM. I staked it all on Spooky Swap, 13% APY. So I've been staking it since for a year. So Spooky's pumping too. So like I kind of forget it and I'm sleeping on it, but FTM is ripping. FTM is one of the big ones too. Let me see where it's at. It's my number 2 on my watch list right here. You can see it's above the 377 exponential moving average. I mean, bro, let's be real, man. Why is FTM pumping more than ETH? This Shanghai thing is real, bro. Like, this Shanghai thing is more significant than I thought before I started the stream, because I looked at ETH. So you know, like, down from the bottom about 288%. But let's look from 2023, because ETH did crash hard, as you know it can, because it went to 800. Okay, so let's talk about all right, here's, you know, the 20 right here. So from 2023, we're up 229%. You already know ETH ain't. So let's take a look at ETH. Dude, this Shanghai thing is real, bro. Like, I didn't really realize it until just right now that it's that bad. Okay, here we go. Here's the bottoms. Right there. You know, this thing's up 42%. Phantom's up like 200 and some percent from the lows. So, yeah. Phantom. Add that, you know, Hex. Yeah. Hex is up 92% on the year. So, you know, it's definitely some of these things you want to put, you know, you don't know what the hell is going to happen. One of them can moon. Now, although I don't think we're going to go to Ath this year, I really do think that we're going to get some coins. Some of these picks are just going to absolutely freaking moon, you know, and like do life-changing shit. So, I think Ath is going to be a while out. I think it's going to be after the halving, you know, shit like that. So I don't think that we're going to be going to all-time highs here, but some coins are going to like 10x, 20x, 100x and shit. So we'll see what happens, man. Anyways, man, thank you, bro. Thank you, HexConX, WW3. Thank you all, guys, for joining along. Please hit the like button if you're listening to the stream. I'm going to jump off. I'm trying to keep it only 1 hour. Thank you, TD, and like and subscribe. Join the WoofPack, and I'll see you guys on the next one. Peace. Bye. Love you.